Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alton, along with Brianna Valesky, and we have David Alton Clark on the line. He's a top financial blogger and former FINRA rep for the oil and gas sector. David, how you doing on this Tuesday morning?
Doing great, Joel. How are you guys doing?
We're doing good here, back after a day off for the Jewish holiday, ready to get back into the markets here. And we just got to go right here to the big decision coming on Thursday. Two-day meeting with the Fed. They've been talking about interest rates going up, data dependent. I mean, I don't even know how long this has been going on for. So why don't you just give us your quick take on what the Fed's going to do, and also, what's important is not only what they do on Thursday, but it's what they do going forward.
That's exactly right, Joel. I think that as far as what's going to happen on Thursday, a lot of that's already been priced into the market. I think everyone knows that at this point, from my perspective, my opinion is they're not going to go on Thursday, but they're going to make a statement that's going to be pretty clear that they're going to go before the end of 2015. Probably in December, I'm thinking. From my point of view, I think they should have gone already. But I think the important point is the glide path after they make the move. The 25 basis points is really a moot point where we're at right now. What matters is what is the language in regards to what's the glide path going to be for the rate going forward.
Why do you think they should have done it already?
I think that the U.S. economy has already reached a level where the indicators have been met, and they kind of missed the boat a little bit on raising the rate a little earlier in the year. But now that all this talk is the volatility's come in to the markets with China's stock markets volatility and all the other macro issues that are going on right now, it's kind of muddied the waters for them. But, those aren't the mandate of the Fed. But at this point in time, I think, based on what they've done in the past, as far as how dovish they've been, that they won't raise it the 25 basis points without first making it totally clear that they're going to raise it the next time.
All right, another big call coming out of Goldman Sachs last week, looking for $20 oil. Now, we've really been in a tight consolidation pattern. I know this is something, a sector, an area that you follow a lot here. Are you in agreement with Goldman here on this $20 oil, and what's your outlook?
I've been thinking a lot about that, Joel. And last time we talked, oil was at 55 or so, I think, and I said it was going to hit 40 before 60, and it has, went down and touched 40, even down to 38. Goldman Sachs' call is based on the storage situation, and that the fact that when all the storage tanks fill up, there's nowhere else to put in the oil, so they're just going to have to sell it at rock bottom prices. I'm not so sure I'm buying into that. I'm willing to take the other side of the Goldman trade, and I would say that gold is not going to hit the 20s at this point.
Yeah, I mean, can you imagine what some of these stocks would be at if your Chevron, your Exxons, and some of your oil, refiners. Well, the refiners are doing okay, but the drillers can only imagine where they would be. So, any particular? I mean, do you think? Just to take the opposite end of that trade, do you think we've seen a multi-year low here? I think it bases the front month contract. We got the 37.75. I've been keeping a real close eye on 43.50 as that represents a 50% pullback from that level. Are you willing to fade them and say the low multi-year low is in?
I think we're close. I don't know if I would say it's totally in. It may get back down, to the mid-30s possibly before the low finally gets put in. But I think the risk-reward is favorable to starting long positions at this point. I would layer in over time, like I've said with ExxonMobil and Chevron. They've gone down significantly right along with oil, but I think if you layered in over the next year, creating a full position, that it's not a bad time to start picking up shares, which I've done with ExxonMobil. I'm long ExxonMobil now.
Okay, yeah, I mean the $72 level's been holding nicely, real quiet ranges over the last couple days. So you're just going in incrementally. Do you have any, if you're trying to buy it on the cheap, do you have like a level where, hey, you're not going to let it get away from you on the upside if it starts to run, maybe the $75 level, or are you pretty confident you're going to be able to pick more up at lower prices?
I think it's pretty well priced right now. That's the reason for layering in over time. It might go up some, and that wouldn't change my strategy. I would still buy it at that point and create the position over the next year. I think though there's a lot of time lag with the oil industry that some people aren't aware of. From what happens in the field to when it finally hits the reports. It's probably about a quarter. So I think that you'd be doing fine buying ExxonMobil anywhere in the 70s.
What would be your time horizon for this? Is this like just a keeper trade? You're just going to buy it here and hold on to it, pass it on to your children. What's your time frame on it?
Yeah, that's right, Joel. I mean, it's about the dividend, also. So. It's an income producing stock, so it's one that I don't plan on selling, along with General Electric.
You're not worried about any of this dividend getting cut, huh?
No, I am not worried about the dividend getting cut from ExxonMobil. They may not have much dividend growth, and the share buyback situation may not continue to grow, but I don't think they're going to mess with the dividend. They're going to keep that no matter what.
We're on the line with David Alton Clock. He's a top financial blogger, former FINRA rep. He's also a licensed realtor in Texas. You pounded the table on that G again, and I know we've talked to you about it over the course of time. Didn't quite get the desired effect of when they did the buyback and the big boost there that faded, came back down here. What's your outlook here for GE moving forward? Or is this another one you're just kind of holding on for that tasty dividend?
Holding on for the dividend is number one, Joel. But their buybacks, one thing is they've held up. It's at 25. It may not have gone up very much, but even after all the volatility that we've had today, it's still at about 25. And when we were talking earlier, it popped to 27 on the news of the share buybacks, $50 billion, but they haven't performed that yet. So that still lies ahead for the stock. So I'm not so concerned that it lost that initial pop to 27 back down to 25. That was all day traders and short-termers anyway. As time goes on, the $50 billion in buybacks should be accretive to the stock going forward.
All right, and another stock you like is Bank of America. Not a huge dividend in Bank of America, but 19-cent range yesterday. Give us your outlook on Bank of America.
I really like Bank of America from the position it's at right now. I loaded up the boat when it went down lower into the low 15s and got another chunk of that. I really think the situation is framing up well for Bank of America. All the financial issues or legal issues are in the past, so they're kind of broken free from that. I believe the Fed is going to raise interest rates by the 25 basis points before the end of the year. I think everyone kind of knows that that's coming already. So I see blue skies ahead for Bank of America.
David, what about China? It seems like there's still a lot of uncertainty in Chinese markets right now, and you kind of called this one a while ago. So, what are you seeing in China right now?
That's interesting, Brianna, right? The last time we talked in July, I had to make the point that China was the real problem. No one was even focusing on China. That
Mm-hmm.
was one of our main
Yeah.
conversations last time. And now you can't turn on the TV without hearing about China. It's funny how what a difference a month makes, But I think China's still in for some more turmoil. I think they were down, maybe 3% last night. I really have no idea what's going on over there. But the last time we talked, you asked me about Alibaba, and I think Alibaba's down about 25% since I said I would not touch it. Um, yeah, and you guys were earlier. You were talking about Yandex. That's the Russian Google, which I wouldn't touch either. So, I don't. I would just stay away from anything China. I don't think that China it really has that much effect on the U.S. market. I think that it's been more of a fear factor than where it'll actually hit our economy. So I think that's going to fade over time.
Anything, and so just general wariness when it comes to Chinese markets, which I totally agree with and is really understandable. Other things that are on your radar right now, what are you looking at?
I heard you talking earlier about Shake Shack and some of the momentum plays, and Shake Shack I would stay away from as well. The issue I have with Shake Shack is uh, they are basing their comps on some of the best stores and best markets that they're hitting. They're hitting those markets first. And I don't think that those stores are going to be able to keep up with the numbers that the current stores are putting out. So I wouldn't short Shake Shack, but I'm just saying that the Shake Shack story has some holes in it. The speculative stock that I like right now is Fitbit, which has
Really?
taken a big hit lately.
What do you like about Fitbit?
I just really think Fitbit hits the niche fitness wearable at the $200 mark. From 100 to 200 or so. I think they've hit the sweet spot. I don't think that the Apple Watch is going to eat into their market share, which is a big reason why it took a header down. And I think it's at a point. I think it's maybe 15% above the IPO level. I just think it's a really good entry point right now. I like the way it's consolidating here. I haven't initiated a position yet, but I've got my finger on the button.
Got your finger on the buy button at Fitbit. I want to ask you, licensed Texas realtor, and you've had that for a few years here. With the downturn in oil prices, you see some houses going up on the markets, or a little strife there in Texas, or are they weathering the storm?
We're weathering the storm great here in Texas, Joel. Texas and San Antonio, where I'm located, it's very well diversified. Texas is a great state for business, so there is tons of businesses moving here. It hasn't slowed down a bit. I'm so lucky that I'm a local here in San Antonio that I can still get around. The highways are just jammed. This season was one of my best seasons for real estate. I was really busy. It kind of slows down after the school year starts, but it was a great year this year, and we really haven't seen any slowdown or any effect because of oil so far.
So you're doing residential?
Residential. I've done worked on a little bit of commercial, but residential real estate. I work for builder for several years, KB Home.
Mm-hmm.
So I've been in the building industry, and then I've flipped over to real estate,
Oh, that's.
general real estate.
Can you comment on KB Homes here? Just kind of been quiet. Looks like we're finding some resistance. Any comments on KB Homes?
KB Home is a great company. From what I've heard here locally, they are planning on doubling their number of communities just in this market. I think that's a great plan. I'd say we're in the mid innings already. It's probably a little priced in, but I think they've got a good plan going forward. They've really got a really good management philosophy, and so I would say KB Home would be a buy here.
So if
But
you're no, I'm just looking at the chart here. Just looking at real estate assets and everything. The REITs and the iShares U.S. Real Estate ETF here. Looks like the people are a little nervous here that rates are going up here. Do you think the real estate ETF is something maybe just let the Fed do their thing and wait for a little shakeout here? It looks like we're getting some resistance as well as support. What's your overall look at in the entire U.S. real estate market?
Usually, when rates start going up, like they may in the next month or two, sometimes that brings business in. People realize, hey, I've got to get in and get a house now and lock down my rate before it goes up even higher. So, if there's good salespeople out there, that's a great closing tool. To say, hey, look, rates are popping up. You better lock one down right now before they go up even further. So probably would be a little bit of a downturn because it's kind of counterintuitive, so there might be a lot of people selling out thinking, oh, rates are going up, I need to get out. And I'd probably buy that dip because I would say that the data going forward will probably prove out that, hey, guess what? More people bought houses. But it is the slow point right now, where we're in right now. Early August is when most schools start. So right now, it's kind of a quiet period for housing.
We're on the line with David Alton Clark. He's a top financial blogger and former FINRA rep for oil and gas, also giving us a little peek at the Texas real estate market, GE, Bank America, and some oil stocks. David, thanks for coming on. Great information. We'll talk to you again soon.
Okay, great. Thanks, Brianna and Joel. It's awesome talking to you guys.
Thanks, Dave.